Understanding this distinction is crucial because it obviously impacts your profitability at different levels of occupancy, i.e. how many people are on your experience. Hi there, Kelsey Toner here, founder of Guest-Focused Tour Business Coaching, where every day myself and our team of tour and activity business coaches are helping you build a thriving, profitable tour business. Welcome back to our series on how to price tours, activities, and experiences for profit. In this video, we're going to dive deep on cost plus pricing. We're going to leverage our done-for-you tour pricing calculator, which in this instance for day tour operators are going to allow you to quickly put in some of your costs on a per tour level, as well as identify some of those annual operating expenses. You're then going to have a table that's going to show you exactly what pricing will lead to what profit margin. We're also going to go through some key terms when it comes to pricing. Hold on and let's get started. So the good news is that the cost plus pricing framework is one of the most simple and intuitive places to start, especially if you're developing new tours, products, or services. It works by first calculating all your costs associated with the tour, 2, adding a markup percentage or your desired profit margin, and 3, arriving at your selling price. The power of this approach is that it forces you to be comprehensive about your costs before you set prices. Many tour operators undercharge simply because they haven't accounted for all of their expenses. So the first crucial distinction at the tour level is to understand the difference between fixed costs per tour and variable costs per tour. Fixed costs don't change regardless of how many guests are on your tour. Whether you got 1 passenger or 20, these costs remain the same for each experience. Examples of fixed costs might include a guide fee or salary for the tour, vehicle rental, a fixed permit fee, equipment usage, or maybe fuel for a predetermined route. Variable costs change directly with the number of guests. More guests means higher variable costs. Examples of variable costs might include admission tickets, food tastings, per-person activity fees, individual souvenirs, or additional guides that might be needed for larger groups. Understanding this distinction is crucial because it obviously impacts your profitability at different levels of occupancy, i.e. how many people are on your experience. It's really crucial for understanding your break-even point and your trip minimums. And this is where there's another key distinction. All of those costs are associated with an individual tour, activity, or experience. These are separate from your overall business expenses. These are the costs of running your business regardless of how many tours you operate. It might include things like office rent, insurance, website maintenance, marketing and advertising, accounting and legal fees, software subscriptions, your salary as the business owner, and taxes and licenses. Essentially, these overhead costs are fixed costs for the business. Even something as simple as a marketing campaign where we set aside $5,000 that we're going to spend on paid ads or hire somebody to help with an SEO investment. Well, the fact of the matter is we're going to pay for that marketing. We're going to have that expense whether or not we actually run any tours. So many tour operators make the mistake of only considering the on-tour costs when we're doing our pricing and not these overhead expenses as well. One simple way of allocating these business expenses to individual tours is to estimate the following. 1, your total annual business operating expenses. 2, how many tours you expect to run per year. And 3, the average number of guests per tour. This can then give you a business overhead cost per guest that can be built into your pricing. Now, there's a few different ways that you can handle these overhead expenses, which we'll come back to. But before we go too much further, I want to take just a beat to define some of the terminology that we often hear when we're talking about pricing and profitability. So we're going to go through these one at a time. We'll put them up on screen, and feel free to pause if you really want to read through the definition and let it sink in. The first is gross revenue. This is the total amount of money that you receive from tour sales before any expenses are deducted. Put another way, this is all of the revenue and total sales that you made before we take anything out of it. The cost of goods sold, or COGS, are all the direct costs associated with delivering your tour, activity, or experience. Guide fees, admission tickets, food, transportation. Another way of thinking about your cost of goods sold is that these are costs that would disappear if you didn't run that specific tour. Third term is gross profit. This is what remains after subtracting your cost of goods sold from your gross revenue. Put another way, it's the money available to cover your business operating expenses and ultimately generate profit for your business. Gross profit equals your total sales less your cost of goods sold. Gross margin, your gross profit expressed simply as a percentage of your gross revenue. For a lot of tour and activity operators, healthy gross margins typically range anywhere from 40 to 60%, just to give you some benchmarks. Next is net profit. This is what remains after all of your business expenses, both the cost of goods sold and your business operating expenses are all paid off. This is actually your business profit. Next is a break-even point at the tour level. This is the number of guests or revenue per departure that's needed to cover all of the costs for that specific tour. Below this point, the tour runs at a loss. Above it, we have extra revenue available for the business. The trip minimum at a tour level is the minimum number of guests, clients, or customers required to justify running that tour at a meaningful profit, i.e. not just breaking even. A trip minimum is always set above that break-even point, and this includes extra room for not only a profit margin, but additionally contributing towards those annual operating expenses. The break-even point at the business level is the total number of guests or total revenue that's required to cover all of your business expenses, including rent, salaries, marketing, and the cost of goods sold. But take notice, even if individual tours are profitable, the business as a whole must reach this threshold to be sustainable. And finally, minimum viable revenue at the business level. This is the revenue target required to not only cover all of our costs, but also generate that healthy profit margin that can support business growth and reinvestment. Understanding these terms is key to be able to run a thriving, profitable tour business. So feel free to pause and go back as you need it. But now let's put this cost plus pricing into action. So I'm going to share with you our day tour pricing calculator that's been shared by some of our tour and activity business coaches. If you don't yet have a copy for yourself, you can go to guestfocus.com/pricing, download it, and let's pop inside and have a look. Okay, welcome inside your tour pricing calculator. Now, the way that we've set this up is that we wanted you to have a copy for yourself. So it is a Google Sheet that you can make a copy inside of your Google Drive, and you can edit it, play with it, make it work for you. There are 3 tabs along the bottom. There's some instructions here, but the second tab is where we get into the tour pricing calculator itself. Let's go through a couple important things. First and foremost, you'll see that there are green cells and red cells. So the green cell means we encourage you to edit or adjust the numbers. These cells here, for example. The red cell means that there's a formula that is automatically being applied. So it's doing some type of calculation. So green means go, red means stop. Let's go top to bottom on this cost plus calculator, again, focused on day tours. So for tour name, we can put anything we want. Kelsey's Fabulous Food Tour, let's say. You can put in the currency and the length of the tour. The length of tour is used as we scroll down into the fixed costs per tour. So we have a guide fee, which for most of us is one of the biggest and most important fixed cost per tour. If we're going to give that guide a $70 compensation, divided by 3 gives us our guide hourly rate. So in this green section, you can add in additional fixed costs per tour. For example, maybe I'm buying a $7 package of local cookies that we're going to share with the group. It's always going to be that package of cookies. I'm not going to save these cookies and pass them on to other groups. So this is a fixed cost. Doesn't matter how many guests are there. Now, if we had a vehicle rental or other things like that, this could easily go in here, maybe a $250 fee. And that will, as you saw here in line 15, the total fixed costs per tour. But given this is a walking food tour, I'm going to zero that out, and we see the total fixed cost per tour is at $77. Scrolling down, we can now add our variable costs per tour. So since this was a simple food tour, you can see here each tasting stop and what we've negotiated with the vendor as the per guest fee. Down at the bottom, you can see the total variable cost per guest auto-calculated. Now, this is also interesting when designing a tour, as we might see here, wow, gosh, food tasting stop number 4 is our highest cost. So let's say I want to go in and ultimately remove that. You'll see an updated total variable cost per guest, but it might be a way to help make this tour a little bit more profitable. You can see here a drink, 1 per guest at $4.75, and a surprise and delight per guest, maybe a small trinket or something like that, that is $2 a pop. So as we scroll down, we start to see the magic happen. So this is our minimum cost to run the tour with 1 guest, meaning the fixed costs of the tour plus 1 guest. This is what that number looks like. Here is the most important box in the whole shebang here. This is where cost plus pricing comes into effect. This amount here is the gross ticket price or the retail price, i.e. the amount that your guest will pay. We're going to manually increase or decrease the amount in this cell to reach our desired gross profit margin. And so if we scroll down, this is our gross profit margin table. And simply what we're doing is we see the number of guests along the top. Now, if you're doing private tours, we can set this up as essentially a fixed cost with 1 guest, but I don't want to get too deep into that right now. As you can see, as we adjust from 40 to 45, let's say, all of these numbers will adjust along the bottom. So in addition to guests, We then have the total revenue that will be generated. We'll have the cost to run the tour. We'll have the profit or loss expressed as a dollar figure, and then the gross profit margin. Now, before we look down at the gross profit margin table, let's look at a few other things that you can add if there's GST or VAT on your ticket sales. Let's say you have a 20% VAT tax that needs to be charged on top of it. Keep in mind this $45 is the end price that they're going to be paying. That means, hey, there's $7.50 of VAT that's going to come out of that dollar amount. So you may want to revise this upwards to 52.50, let's say, to help cover the cost of that GST or VAT. You can also leave it blank if you prefer. The average commission we'll return to in another lesson, but this is an opportunity to put in a figure here. If we know that, hey, 25% or 15% commission will be added, and this is going to be that margin for distribution. But like I said, we'll return to that in a moment. Let's leave it blank. The credit card fees in here are based on a 2.9% plus 0.3 per transaction. If you have a different credit card rate, you can edit that in the formula. The last thing I'll mention is the booking fee, i.e. a reservation platform. So again, if $52.50 is the end price, the total amount that a person is going to pay, that might include this 6% booking fee. But $3.15 of that is ultimately going to be going to your booking software. So again, if it's easier, you can leave this blank, but we encourage you to think about this as that final price that somebody is going to be paying. So now let's have a look at this gross profit margin table, and we can start to look at, for example, where is our per tour break even point? So at this $52.50, we need 3 guests just to break even, just to cover the cost of goods sold for this tour. Now, if you recall, we said for the gross profit margin, some industry benchmarks are that we want at least between 40 and 60%. And as you can see, wow, we can't even get to 60% at this pricing because we haven't factored in any of the overhead costs for your business. So right away, I'm seeing that this probably needs to be much higher. Let's go up to 65 and see what happens. So now scrolling down, I see that I'm getting to a 40% at around 5 guests. And that's 60% not until we have 13 people. Now, if 13 people is pretty high, my instincts are saying that, hey, let's increase the price even further. Now, if we jump to $85 per person, we start to see that we can get to that 60% gross profit margin now at 6 guests. And so while that 40 to 60% guideline is useful, what we really want people to be thinking is going in and using this third tab. So here is where we can start putting in our annual operating expenses. Let's keep an eye on the left side of our screen. So in here is where we want to put your maybe target take-home pay, some of the wages that you might be paying yourself, let's say for admin work, for customer service, etc. Keep in mind, this is separate from the guide fee. Are there vehicle operating costs, advertising, marketing, or promotion, rent, registrations, insurance, repairs, printing, accounting, bank fees, membership fees, telephone, stationery, etc. It's important that you put in the numbers that are most relevant to your business, and then you can start to appreciate your total annual operating expenses. As we scroll back to the top, you'll see this is a pretty simplified version where we essentially have just one tour activity or experience, and here's our annual operating expenses. But here are some of the key numbers that we need to be thinking about as we start thinking about amortizing those annual operating expenses over all of our tours. Okay, but you might be wondering, hey, how do we move from these annual operating expenses to actually calculating and estimating what our net profit margin should be? Or put another way, how can we start to project forward and plan for or aim for a net profit margin, meaning the overall profit of the business? So before we jump back into the calculator, there's 2 additional concepts to think about. One is your maximum tour capacity, meaning what is the maximum number of tours that you could run, and what is the maximum capacity, let's say the maximum number of guests who could feasibly be on this tour. That would be if basically we had more demand than we had supply and every single tour was full and we ran every single tour. Now, this is a nice to know number, but it's almost never the number that we want to use when trying to project net profit margin. What we much prefer to use is our average number of tours per year and the average number of guests. Now, if you have past year's data, this should be something relatively simple to calculate. And if you've added additional time slots, or you know that you're going to be running an additional 30 to 40 tours per year in the upcoming year, then we can make that calculation. But this average number of guests on a tour and the average number of tours, by the way, if you're seasonal, then we know that that season, that window of time, it doesn't really matter when they're falling. That's why this number is pretty useful. So we have our maximum and we have our average capacity. Let's dive back in and have a look. So in here is where we put our maximum annual capacity. Let's say for Kelsey's Fabulous Food Tours, I could in theory run 90, or we're gonna put 90 up for sale, and the max number that I can have on each tour is 12. Well, this is gonna auto-calculate the number of guests per year for us. But I know from past years that we only ran 80 of those due to some cancellations that inevitably came up. And on average, we only had 8 guests per tour. Ultimately, this should give us a much more realistic number for the average number of guests per year. And by all means, we encourage you to play with this. But these squares are green for a reason. If you know that the average number of guests for your particular tour is lower and it's 5, or we're going to be aiming higher, and let's say we're really going to be doing some additional investments and trying to get the average number of guests per tour up higher, then we can simply make these changes accordingly. Okay, once we have those numbers in, we can scroll down and we can start to see that if we had this average capacity, meaning this number of tours and this average number of guests, we can start to see our average capacity annual costs. You can see our average capacity annual revenue, meaning it's pulling in some of the data from your tour pricing calculator, where we put in your variable cost, you put in your fixed tour cost, and you put in the ticket price, which is where we get this revenue figure. The average capacity annual net profit at this particular price is we're still losing $7,000, meaning we are operating at a loss of 11%. And even though this is a simplified version of the calculator, hopefully the principle is coming through that we are still operating at a loss, meaning there's no profit margin at this tour price. So if we came back and we adjust our gross ticket price, we can then return to that tab to see the impact. Let's say we go up to $105. Now, of course, we can see our margins down here on the gross profit margin table. But as we go over to our annual operating expenses, that one change has now got us into a 9.73 or almost 10% profit margin. And that is already inclusive, by the way, of $40,000 in take-home pay for wages. So as you can imagine, if you want your wages to go up, or if we have additional marketing expenses, these numbers will go up. But ultimately, at a glance, we're going to be using our average annual capacity to calculate out our net profit margin. Okay, so that was a pretty quick overview. And if you're not used to using a calculator like this, I totally understand if it felt a little bit overwhelming. One of the best things that you can do is make a copy of this calculator for yourself and start plugging in your own numbers. Using this, seeing what it outputs for you is going to be one of the best ways to wrap your head around these different formulas and some of the key definitions that we covered earlier in this lesson. Hopefully you see the value in having this type of tool, not only for creating new tours, activities, and experiences where we can very quickly input some of those fixed costs per tour and variable costs per tour and see what comes out in the wash. It's important to wrap our heads around the difference between that gross profit margin on a per tour level versus that net profit margin at the end of the year. Many of our coaching members have used this base calculator and then added additional tours or added additional complexity. For example, if you have 2 tours and each of them have the same number of tours, we might just want a 50% allocation of those annual operating expenses. But maybe you have a more premium tour and a cheaper priced tour, and 75% of your revenue comes from tour A. Well, we may want to attribute 75% of our annual operating costs to that particular tour and 25% of our annual operating costs for that other tour, even if the number of tours is not split 50-50. So there's a few different ways that you can think about balancing out your contributions to the annual operating expenses. As mentioned, you can grab a copy of our day tour pricing calculator at guestfocus.com/pricing. If you have some questions as you're getting in there, in the comments below, let us know. We'd be happy to chime in and hopefully help out. Now, if you found this series useful, or you have a friend or a colleague, it would mean the world to us if you would share this video series with them, or maybe even that calculator. Thanks so much for being here. If you're following us on YouTube, hit subscribe, hit that notification bell. We'll let you know when our next video comes out. Thanks so much, and we'll see you again soon.